Hello, it's Big Cheds, and this is the Trading Encyclopedia daily education playlist on my YouTube, Cheds Trading. Find me on Twitter at Big Cheds, and of course, Bitcoin Live, where I'm a founding analyst. For today's lesson, we're going to talk about divergence. What is divergence? Well, the idea with divergence is that an oscillator, whether it be the OBV, the RSI, the stochastic, MACD, kind of anything, that oscillator is not confirming what the price is doing, right? So we remember that oscillators calculate on a candle body close. So the idea would be that, for example, we take this high and this high, we've made a new high. And the question is, does the on-balance volume confirm the high? Here it does, but let's say the on-balance volume had a lower high. That would be a regular divergence. So there's a lot of different types of divergence. The two main types are regular and hidden. And for regular, you actually have three subtypes: weak, medium, and strong. So regular divergence basically means, in the example I showed you, a bearish divergence would be the price made a higher high, but the oscillator made a lower high. A more medium divergence would be that the price made an even high, oscillator lower high, and a weaker divergence would be that the price made a higher high and the oscillator was even. So it's kind of subsets of that, but either way, in each of these three examples, you can see the oscillator is not confirming what the price is doing. Hidden divergence is continuation divergence. So rather than suggesting that the trend reverses, the idea is that the trend is likely to continue. So for example, and we're drawing lows, comparing lows to lows for RSI for bullish hidden divergence. So for example, if we took this low and we took this low here, okay, we have a higher low, we'd look at the RSI. What does the RSI do? What is it confirming? The RSI is showing a lower low. This is a hidden divergence. This is a bullish hidden divergence. Why? Well, the price retained their gains while the RSI cooled off. And that is a hidden bullish divergence. Lower low in the oscillator, higher low in the price. RSI and bounded oscillators like the RSI, like the stochastics, they work well for hidden divergence or continuation divergence. You don't want to use the on-balance volume for hidden divergence, nor do you want to use the RSI for regular divergence. And I'll do separate videos on each of these things. So this is a nuanced topic. But regular divergence is continuation. Regular divergence is reversal, pardon me. Hidden divergence is continuation. And you can see here, basically, it's a question of, does the oscillator match what the price is doing? And we're checking again by looking at the candle body close. You can also use a line chart as well to help you. Rather than focusing on the close, you can use a line chart. Line charts work well for drawing divergence. This is a brief overview on regular and hidden divergence for the Trading Encyclopedia on my YouTube, Cheds Trading. Find me on Twitter at Big Cheds and Bitcoin Live. Thank you, everybody. I'll talk to you soon. Big Cheds out.